Focus at this hour, the Reserve Bank of India has released its annual report for 2015-16. Now, according to that report, the country's economic growth is still below potential and inflation projections remain at the upper end of the RBI's objective. In fact, let's bring in Lata Venkatesh to take us through the key highlights of that report. Hi, Lata.
Okay, well, the first flashes are coming in. And the important takeaway from this is that growth is still, as you said, subdued, not according to capacity. But more importantly, I think the noises on inflation have become a little more worrisome. The Reserve Bank's own words are that inflation is at the upper end of its projection, which of course is known. But then the Reserve Bank goes on to say that one of the structural reforms will be that it will persevere with disinflation towards a medium-term CPI goal of 4% under the new monetary policy framework. So both these together give the impression that there are no rate cuts round the corner. The Reserve Bank even says this, and it's very important. This is the governor's note or foreword. It says, room to cut policy rates can emerge only if inflation is projected to fall further. So the projections of the Reserve Bank have to change to say that inflation will fall further. Only then there will be room to cut rates. As of now, the Reserve Bank says that there is a slight upward bias to the forecast of 5%, which it expects in the first quarter of calendar 2017. So just to reiterate, one of the things we have on inflation is that there is an upward risk, which was already mentioned in the monetary policy, to that 5%, that the Reserve Bank's medium-term goal is 4%. So as of now, with current projections, there doesn't seem to be space to cut rates. It says only if the projections fall further will there be room to cut rates. That's an important, nuanced, forward-looking statement that's coming. On growth, it once again states that 7.6% is the GDP growth, which will be better than the 7.2% that was we got in last year. But there is no upward or downward risk to that. It says the overall GVA growth is projected at 7.6%, up from 7.2% last year. There is a hope that there will be a virtuous cycle which will be kicked in because of favorable monsoon, the 7th Pay Commission, both of which could engender more consumption. More consumption will mean better capacity utilization, which is now pretty low, I mean below 70%. Once capacity utilization increases, the companies will be forced to invest, and that investment will create further jobs and further consumption. So a virtuous cycle is expected to kick in, but the ingredients are there, and this could get a further impetus because of the GST. Among the medium-term goals, that medium-term structural adjustments that the Reserve Bank expects, one, of course, is, as I told you, that working towards the 4% glide path of CPI. It doesn't state the year, at least not till I read. But it goes on to say that one is expecting that various state governments will implement labor reforms and land reforms, and that also will improve productivity. They're also hoping that some impetus will come to the power sector from the Uday reforms getting implemented, and therefore the DISCOMs being out of financial problems. As well, you will have maybe the insolvency code kicking in better resolution of troubled assets. Let me get to the bunch of economists who are with us. Subhadeep Rakshit, the economist at Kotak Institutional Equities, is with us. We also have Mr. D.K. Joshi of CRISIL, and we are going to get Mrs. Bhattacharya very soon. Mr. Joshi, from what you have heard, the slight hawkishness which I thought was there in the Reserve Bank, saying that unless projections are further cut, there isn't much of a chance of rate cut. Your thoughts?
Well, I think, I mean, in a sense, the inflation has surprised positively because I'm hearing my echo. So
go ahead. Just pull out your earpiece and go ahead.
Yeah, I think the inflation has surprised us on the negative side, because the target is 5%, and there has been a sudden spurt because of food items. It's kind of indeed ironical that 2 years of bad monsoons and the food inflation stayed under control. But now I think with the onset of good monsoons, the inflation is going up. So, I mean, to me, it looks like it's transitory, and the areas sown under pulses, the good rains along with it mean that that many of the items within the food which were pressurizing inflation should soften going ahead. So I mean, I would still view a 5% target being met. I think that's our call. But yeah, from a central bank perspective, I think there is a shock to the inflation which was unexpected, so they need to be cautious. We are indeed penciling in another 25 basis rate cut sometimes this calendar year itself. But I think there is caution warranted on the inflation front. I would agree, because food inflation has been something which is an idiosyncratic risk, and it keeps playing out again and again.
Okay. We will set that audio right, Mr. Joshi. But meanwhile, let me get to Mrs. Bhattacharya, who is with us, fortunately. Mrs. Bhattacharya, one of the first things that I got from the annual report is a certain hawkishness that unless inflation projections fall further, there may not be scope to cut rates, or rather, I mean, let me not paraphrase the Reserve Bank. The words that they exactly say is that, well, let me read it out. The room to cut policy rates can emerge only if inflation is projected to fall further. So it looks like at the moment they don't see room. Hypothetically, if there are no rate cuts, will that be a dampener, Mrs. Bhattacharya?
Well, if there are no rate cuts, it will definitely not be a positive. I don't see it as a big negative, because frankly speaking, 25 basis points this way, that way is not going to stop any projects. But the fact of the matter is, a rate cut is more like a signal. It brings back more confidence to the economy. And that is where, you know, business confidence is paramount if you are looking at growth. So I think it is more that than any material impact that it will have. In any case, you know, going forward, we do see the rates drifting down a little. At least both the deposit and the lending rates will drift down further, even without a rate cut. So that will happen. But I think a rate cut, basically what it does is it signals the need for growth. And that, I think, is a very, what should I say, a confidence boosting measure.
Okay. Well, it's of course quite possible that, as Mr. Joshi says, inflation projections can fall, but as of now they don't seem to see any scope to cut rates. Well, from my cursory reading of the report, it also indicates that there is a hope that monsoon and pay commission will boost growth, will boost consumption, and that will increase capacity utilization, and that will force companies to start capex, which is not there now. Do you see such a virtuous cycle of growth, as the RBI puts it?
I would definitely share that hope. I have also been saying that the two main triggers that we are looking at is the monsoon and the 7th pay commission. As you know, in India, the demand always builds from the bottom. And if there is demand destruction, widespread demand destruction at the bottom, then definitely the overall demand in the economy comes down. And that results in lower capacity utilization of all our production units. So to that extent, as the demand builds up from the bottom, and I think it will build up from the bottom, two reasons. One is, of course, that there is good monsoon, and I think now this year the NREGA flow also has been much better. So both put together, I think, will create a demand at the lower levels, which in turn, you know, will roll up into higher capacity utilization as we go ahead. The 7th pay commission is also a booster. Again, it is not the amount of money that will come in, because I think a lot of money will go into PF and things like that, may not actually be in the hands of the people. But even then, I think that is also a confidence booster, a morale booster, and we will see consumption going up on the back of that. Given the fact that the festival season is also just around the corner, both of these two coming in conjunction with the festival season, we definitely expect to see demand going up. And that should definitely be good for the economy.
Okay, Mrs. Bhattacharya, Mr. Joshi, Aditi, and Rakshit, just stay on. Ritu Singh, my colleague, is with me, and she has read a couple of chapters, and I have read a couple. So, Ritu, the key takeaways that you found.
Well, the big key takeaway is that at least in the near term, the domestic outlook looks much better than the previous year. What the report does point out is there are some areas that continue to see, impairments. There are stalled areas, but there are also areas of hope. Primarily, they point out to the roads, the ports, and the railway sectors, even the national highways, where they say roads are being built by at least 20 kilometers per day. So they are seeing positive signs. They're seeing green shoots of recovery, and therefore they're hopeful that going forward, the economic outlook does look a lot better than the previous year. And the big growth story for 2016 could also be the agriculture sector, surprisingly. In fact, they say data points out that in the last few months, rural wages have been growing, which shows that demand in the rural areas are growing. Even two-wheeler data also shows that there has been some rise. And that could be the surprising big, growth story for 2016. Monsoons have, the initial data at least shows have augured well after 2 successive years of drought in the previous years. And that is something that the RBI seems very, very bullish on. Inflation, again, is something that they say remains a cause of concern. They're yet to see the impact of the 7th Pay Commission, although there'll also be the positive repercussion where the economy may see positive benefits with more money flowing through to in the hands of people.
Okay. Mrs. Bhattacharya, I'm coming to you with one more question, because I read a chapter about banks, and they are talking about consumer grievance redressal, but only on the points that Ritu has just raised. Let me go to Rupa. Rupa, what have you made of the statements that you got? A little bit of hawkishness on inflation and a little bit of hope on growth.
I think I support the sentiment, because we have been seeing that policy direction has been right, and we are going to have a lot of benefit coming out of consumption stimuli. Having said that, you see, India's inflation is very much structural in nature. And even though, we may see some kind of ease around March because of base effect also, and of course the outcome of favorable monsoon on food inflation, I think containing inflation within RBI's projected trajectory beyond March is going to be a challenge, and that's what they are cautioning. So I fully support their cautious stance on inflation. But so far as growth is concerned, I share the optimism, because a lot of things are moving in the right direction for India at the current juncture.
Okay. Well, let me get Aditi as well. Aditi, they're speaking about a durable pick in investment activity remaining elusive, but consumption will provide a lot of support to aggregate demand. On these even on the FX, a fairly positive statement being made that now you have 11 months of import equivalent of reserves. Your comments?
Lata, definitely as far as the overall sentiment is concerned, I think we echo the same views as far as the consumption-led stimulus to growth in the current year. Very much with the kind of boost coming in from the rural side, from the monsoon, as well as the Pay Commission, which will really help urban demand. Consumption should pick up, and particularly after the festival season, I think we should be able to see a lot better volume growth for the manufacturing sector. And as capex capacity utilization improves, some capex should start to get announced towards the end of this fiscal year. And without that, it's unlikely that we're going to see a very durable uptick. So we may see a short-term pickup because of the consumption-led demand, but for that to become durable, we would have to see capacity expansions getting announced by the private sector, and at least in some sectors, as far as infrastructure is concerned, building on the good beginnings that we've seen in sectors like roads and ports, which you had mentioned. In fact, when we speak of the road sector, in fact, when we look at what's happened in the last 3 months from the CCI, the approvals that have come have been for about another 50 projects, and half of those are concentrated in the road sector. Now, the benefits over here are that these projects tend to be lower ticket size and tend to move a lot faster. And also the reforms that the government has announced in the last couple of years have really helped to get projects in the road sector moving. So I think, at least some of these sectors, urban infrastructure as well, metro rail, we should be able to see the good momentum continuing, but that would need to broaden to other infrastructure sectors as well to be able to ensure that the consumption-led pickup in the current year then broadens into, a more durable infrastructure-led growth as well. On the inflation front, I agree, we cannot let go of caution given the kind of volatility that we do see in the Indian CPI, with sharp dips followed by surprising pickups, even what we've seen in 2016. I do think we need to wait for at least the next CPI print to come in, which I suspect is going to be sharply lower than the last couple of prints.
Okay, Aditi, I can't keep Mrs. Bhattacharya waiting. I'm just getting the two banking issues that I could quickly read. Mrs. Bhattacharya, Reserve Bank is also asking banks to go big on consumer grievance redressal, especially in rural areas, and they say that they're also going to spend a lot of time and money and bandwidth on, alerting consumers. They want every bank to set up an ombudsman. Your thoughts?
Actually, on the consumer redressal front, I think most of the banks already have internal ombudsmen. We have, and I'm sure a number of others have also, because I know some of our own people have been employed by other banks. So this ombudsman process is already there. However, to ensure that everybody gets the advantage of this, it's a question of raising awareness. Also, the fact remains that, with the more and more use of electronic channel, it is very important for the consumer to understand what he should do and what he shouldn't do. I am aware of a case where a person received 8 wrong, calls regarding usage of their card. And this person on all 8 occasions parted with his OTP, which is the one-time PIN. Though when the OTP is sent on a person's mobile, the message states that please do not part with this to anybody at all and use it yourself. This message is part of the SMS that goes. In spite of this person parted with it in one evening on 8 occasions. Now, stuff like this is very difficult to control unless and until people understand what they can do and what they can't do. So I think what is really required in our country is to raise the level of consciousness. And that, I think, we have to do it together. The RBI also has a fund for customer awareness and customer education. We ourselves are doing a lot from our side. I think all of us need to get together in order to repeatedly tell people about how they can protect themselves.
Okay, and finally, a comment on the banking system from RBI is that they're very hopeful that troubled assets will be resolved quickly. Either they will be, purchased by some other party, or there will be a management change by the public sector. And actually, my colleague has broken some stories on that. So do you share the Reserve Bank's optimism, your own comments on the resolution of troubled assets?
I feel that we should not have any doubt about the resolution outcomes at all. If we are to do well and if growth has to come back, resolution of these assets is something that is primary. And it is with that belief that we are working very, very hard on the resolution piece. We fully believe that it will happen. Yes, it is taking time because, again, in India, we have to do, there are a lot of things we are doing for the very first time. We may not have the enabling environment. We may not have the right kind of laws. We may not have the right kind of enforcement people. But having said all of that, and even from the banker side, we may not have the right kind of maybe the knowledge or the right kind of systems. So all of that even taken together, I would say it's still something that is very primary to the state of the nation and the health of the nation. And therefore, we have to get the resolutions of these clogged assets. We will continue to work on these with full faith and hope that they can be done.
Right, Mrs. Bhattacharya, really kind of you to stay up with us and speak about the annual report. We have our team of economists still with us. Rakshit, you've heard a bit about what my colleague and I have told you about the annual report. The confidence about 7.6% and an agri consumption, rural consumption, demand-led growth. Your thoughts on that, as well your thoughts on these slight doubts over inflation. And, you know, in a couple of places, the Reserve Bank has kept that 4% glide path. I saw 2 references to it. Now, if 4% is so very real as a goal, then what are your thoughts about rate cuts going forward?
I think, first of all, we need to realize that, and I think the market has already kind of internalized it, that consumption is the way forward in terms of driving growth. Monsoon, again, it's 2 years of weak monsoons, and subsequently we are going to have a normal monsoon, as well as consequently your income effect from the monsoons to the rural demand coming into play. It's essentially a consumption story as of now. It's not yet what we call in a general durable growth path as of now. But more importantly, from a year basis, FY17 is a consumption-led story. The RBI is probably internalizing it. They're talking about a 7.6 taking into effect, I'm sure, a bit of the pay commission and a bit of the monsoon-led rural demand recovery. Having said that, this cannot continue year on year, because at some point in time there will be the inflationary pressures that will come in. So unless you get the investment cycle going from the private sector side, and correctly, I have heard comments made about the CAPU starting to increase and the capacity being utilization starting to go up. But that will take time. It's not an immediate focus area that can immediately emerge for the companies. It will be after, in some sense, the corporate balance sheet kind of deleverage, the banks are in better position. So for now, I think it's something that we should be focused on, agri as well as consumption, rural and urban consumption. And not much upside from growth, at least in terms of on a year-on-year basis, say moving into say FY18 or FY19. Okay. Having said that, also the other point on inflation is very real. I don't think there is much downside from a 5% right now. Even if we move into the FY18 and if the 4% mark is something that the RBI really focuses on, I think if there is really less scope for rates to come down, at least from the policy rate side. And one thing we have to realize is that, again, the food inflation needs to come down on a structural basis. It is not something that can happen suddenly in a year. Suddenly, this year food inflation goes down and keeps on to be low. It is not going to happen that way. It is a structural problem that India faces, and you have to take it on a year-on-year basis. So a 4% mark, if the RBI continues to have, it's a good thing to have. It sets the expectations, the forward expectations in check, and at least helps in the expectations channel to lower inflation. But having said that, building in a scenario of lower interest rates, in a scenario where 4% is a realistic target that the RBI is looking at for the end FY18, I think the scope for further policy rate cuts will be limited. While we say that there can be 25 bips, 50 bips here and there, but that is again subject to how food inflation behaves, how the core inflation behaves, because again on the core inflation side, we have again structural challenges.
Okay, Rakshit, I'm afraid we are out of time. I was trying to get one more question squeezed in. I just wanted to say a word on the dividend declared. The dividend declared is 65,876 crore compared to 65,896 crore in the previous year, and the year before was 52,500 crore. So the 3 years of Rajan actually have resulted in a dividend of 1.85 lakh crore, which is more than the total dividend declared in the last 10 years.
In fact, there's a very interesting trivia that of the non-tax revenues of the government, RBI's dividends alone make a quarter of that. So by that, you can tell the amount of dividends that the RBI makes, and if they go into losses, what will happen to our revenues?
Okay, yeah, I mean, that's a very important point that we should take away from the annual report as well. The hefty dividends and whether Reserve Bank will be able to continue. They have not set aside any money at all for contingencies. That is what they have already done over the past 10 years. So in the last 3 years, just about all the income of the year has been passed over to the government as dividend. In the previous 10 years, a lot of it used to be kept aside for contingencies, but now the Reserve Bank, according to a Malegaon committee advice, believes that it has enough for contingencies, which is about 7.5% of its total balance sheet, and therefore it feels it is adequate in terms of contingencies, and therefore the entire earnings have been passed off as dividend.
And the dividends of the RBI also, another fact, is 0.5% of our GDP right now. So substantial increase, in fact, we've seen over the last few years into the money that the RBI has transferring to the government.
Okay, well, it's a very, very rich document, and I'm afraid that I could only give you all a few asides. Rakshit, Mr. Joshi, Aditi, Rupa, thank you very much for joining us on this discussion of the Reserve Bank annual report. The annual report for the first time gives you a hint that the Reserve Bank is damn serious about the 4% glide path, which is about 18 months down the line, as well that it's seeing upward risks to inflation, and therefore at the moment, at current inflation projections, a further cut looks unlikely. Those two are very hawkish statements that we are getting from the annual report, but there is a lot of good news as well. With that, we wind up this special edition on the Reserve Bank's annual report. News and updates continue.